Hello! Today we're going to be discussing the straight line depreciation method. The straight line depreciation method is the most simple method because it assigns the same depreciation expense for each year. And the way you calculate the straight line depreciation expense per year is first you take the cost of your asset, then you subtract the salvage value, which is the amount of money you think you can sell the asset for at the end of its life, and you divide that by the useful life, which is the number of years or months that you believe you can use the asset for. Now in this problem it says that on January 1st, 2009, Mr. Ed's Consulting Services purchased a company vehicle for $25,000 with an estimated 4-year useful life and a $3,000 salvage value. We are asked to calculate the depreciation expense, accumulated depreciation, and book value for the 4 years of the vehicle's life. And we're going to do that in this chart over here. Now the first thing to do is to write down the relevant information from the problem. So we're told that we purchased the asset for $25,000, so that's going to be our cost. We're told that it has a $3,000 salvage value, so we can copy that down. And we're told that we have an estimated 4-year useful life on this vehicle, so that's going to be 4. Now we can calculate our depreciation per year using this formula up here. So first we need to take the cost of $25,000, subtract the salvage value, which is $3,000, and divide that by the useful life, which is 4 years. And that tells us that the depreciation per year is $5,500. So that's going to be our depreciation for each of the 4 years. So we can copy that down. Now the next column, the accumulated depreciation, just adds up each of the depreciation expenses up until that particular year. So in the first year, it's just going to be the $5,500. And in the second year, it's going to be the total of the first 2 years depreciation expense. So that's going to be $11,000. And then we're going to add the third years, which is another $5,500. So that's going to be $16,500. And then we can add the last one, which is going to bring us to $22,000. All right, finally we have the book value, which I've just written the formula here, is the cost minus the accumulated depreciation. And remember, the cost is $25,000. So I can take the $25,000 and I can subtract the accumulated depreciation for that year. And we can continue to do that for each of the years. And then when you're all done and you've calculated that for each year, you should notice that the last year's book value is the same as the salvage value. Now that's always going to be the case for straight line depreciation. So that's a good way to check your work.